Good morning. It's Big Chads. I'm coming to you on a Wednesday, June 15th, 2022. I want to say a heartfelt welcome and thank you for watching this. This is part 15 of the 50-part video series based on my best-selling book, Trading Wisdom, 50 Lessons Every Trader Should Know. When the book first came out, people were asking me, hey, do you have an audio version? Is there, they want to listen to it in the car. Maybe, some people don't like to read. They're more of auditory learners, and I get that. But I didn't have one at the time. So what I started to do was to do these videos on YouTube. I've been doing one chapter at a time for free, kind of explaining my thoughts. And it gives people, not only people who want to listen to an audio version, it gives people an opportunity who can't buy the book. An opportunity for them to get to the content. So that's what I've been doing. So now eventually the book was eventually made into the audio format. Let's get that out of the way. I do have an audio book format. It's on Audible right now, but the book's available on Amazon, 4 formats. The reviews are unbelievable. So I just have to say thank you to everyone for that. And it's just great. It's awesome. The feeling that people really enjoy it, and it's helped people. So I'm really proud of that. Just to remind you, you can find me on Twitter at Big Cheds. I'm of course on YouTube at Cheds Trading. This will be part, if you click on playlists, Trading Wisdom, 50 Lessons Every Trader Should Know. So this is part 15, right? I'm going to do the entire book for free for you on my YouTube channel. That's what this is. Just a couple other things real quick. If you're interested in learning how to trade, start with the tutorials, TA Masterclass, webinars playlist. There's 3 of them. I think that will help you out greatly. It will give you kind of a sense of moving averages and just how to get things started. If you're lost and you're struggling, even if not, it's a great place to start. So I definitely encourage you to check that out. I also have great interviews. I have a really exciting new interview coming up soon. I'll announce that in a little bit. Check out my quick market updates where I kind of just, occasionally will do market updates, for YouTube. I don't do them that often because twice a week I do a long form full market update for Bitcoin Live. It's the best in class educational platform for crypto. I've been doing market updates there for 4 years. I pretty much never miss a video. So, and I'm just one guy, part of an unbelievable team. I would definitely encourage you to check that out. If you have any questions, just reach out to me. I want to also mention I am the author of My Battles with Cancer. I'm a former cancer patient and caregiver. I'd like to send you this book for free. If you know someone who's fighting cancer or you have a loved one who's fighting cancer, just, reach out to me. Find a way to get me your email, and I'm going to go ahead and send you that for free. So let's get this party started. Just before we jump in, by the way, we're doing lesson 15, stick with what works. Last week I did lesson 14. Pick your spots carefully, and we'll do a very, very interesting lesson next time, which will be 3 or 4 weeks from now. Switch time frames wisely. I'll leave this about the author. We'll do it this way. So we'll do them one at a time. Just hit pause, and you can read this. I'm not going to read it right now. Hit pause whenever you want. Check that out. And there's the introduction. So, and you can also hit pause and read that. I'm not going to waste your time. Someone dinging me there on the phone. I'm sorry about that. So let's get right into this. And once again, folks, thank you for listening. Thank you for watching, and appreciate all your support. So we're doing lesson 15. For those of you who are reading, let me turn off my phone here in case I get a few more of those messages. It goes ding, 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 ding. All right, so let's go to lesson 15. If you're reading along from home, lesson 14. Yeah, stick with what works, 15. Go to page 39 in your book. So as always, we start out the chapter with a quote. Quote, cut your losers, add to your winners, and the rest is history. Now I go on to say, it may sound simple, but it's true. If you find yourself unwilling to add to losing trades and preferring instead to add to your winning trades, chances are that you are a successful trader. Everyone has heard of the phrase averaging down, but what about averaging up? When your trade turns green and breaks some resistance level or support level, confirming your trade thesis, that's a good time to average up and increase your position size because you have already correctly picked the direction of the trade. And because, as I say, because you've already correctly picked the direction of the trade, it's advantageous for you to increase your risk amount and ride the trend. This way, you will reap the rewards of continuation. So, you've heard it. This is not like revolutionary stuff. Cut your losers, add to your winners. But it's really important. The only way to survive, the only way to become successful is to survive. And to do that, you need experience. And the way to get all that experience without losing all your funds is to cut your losers. When you enter a trade, you need to know exactly where that trade idea fails. And hopefully it's pretty close to your entry. We talk about risk reward. You need a minimum of 3 to 1. You look for an asymmetric risk reward where you enter close to an invalidation level with a lot of upside. When your idea fails, you get out, right? But you also want to increase your position when you are right. So, if you get a good entry, it's okay to actually add into your trade. Like I bet many of you have no problem averaging down and adding to your losers, but you never add to your winners. And that's the thing. You've already made the right decision. It's okay to add to your winners because you're moving in the right direction, right? So you cut your losers, add to your winners, and the rest is history. Right? This is a critical point. When your trade turns green and breaks some resistance or support level, depending if you're going long or short, confirming your trade thesis, that's a good time to average up. So you think about that. When you start your trade, you not only want to think about where the trade idea fails, but you want to think about where that trade idea might be confirmed, okay? So as I move on in the book, I say, averaging down is okay if done in certain ways, such as when you have scaled in lightly beforehand, and this new entry offers an even greater risk-reward type of scenario. So I really, in general, try to discourage people from averaging down because you're adding to a losing trade. But as I say here, you can do it if you've scaled in, which means, say you want to put $1,000 total into the position, your first entry is only $250. You can average down with that second position because you started out really light, your first entry. But it's not just random. It needs that second entry, wherever you're scaling, it needs to be at a really critical level and even more major support, right, than your first entry. So it's not just a random level. It's not just I'm averaging, I'm adding a position because I'm already down 30%. Like, that's not a trade thesis. That second entry itself also needs to have its own, level where the trade idea has failed. And as I say in here, it's okay if it's done in certain ways, and such as, like if you've scaled in lightly, and this new entry offers an even greater risk reward. So it needs to be at like an even better level and even a more major support level with more price structure and that sort of thing. All right. So that's the exception to the rule. As I say in the book, much of proper trading strategy involves following and capturing the benefit of momentum, right? That's the whole thing. You want to be riding momentum. And most of the time you're losing money. I'm losing money is when I'm trying to guess a bottom. I'm fighting the trend. You want to involve following and capturing the benefit of momentum. So if you think about it that way, it makes sense to add to positive momentum plays and to reduce risk to negative plays, right? You're in the wrong direction, you have negative momentum, you're going against the trend, you were wrong. Why would you add to that, right? You want to add when you're right and you're riding the trend, capture the benefit of momentum. As I say in the book, if you cut your losing plays early, there will be less pressure on your winning plays to make up for those big trading mistakes. That's so important, right? And this is how people go tilt and they lose their whole bankroll is because they don't cut their losing trades early. They make a bunch of mistakes, and then when they finally capitulate, they're down 60, 70%. And with whatever they have left, they're like, all right, they say, okay, I need to now 3x this position to get back. I get all these DMs on Twitter where people are like, hey, I've lost all this money. I need a really big winner now. It's like, don't put yourself in that position, right? Don't that you're going to make another mistake, right? You're making mistakes that are setting you up for an even greater mistake because now there's all this pressure. You're going to force it. You're going to try to higher leverage, or you try to really put your whole position in because you feel like I need to make it back, right? If you cut your losing plays early, there will be less pressure on your winning plays to make up for those big trading mistakes. So avoid those big trading mistakes by cutting your losers early. As I say in the book, this is a key component to any sustainable trading strategy. Sustainable, that's important. You need to stay in the game. You need to keep getting experience and exposure to the market. As you examine the chart on those plays that you're holding, make sure you have levels marked where you would average up in addition to where you would cut your position. So I know I'm repeating myself. I'm really drilling these points home. When you enter your trade, you need to know when the idea fails, and you need to know when that idea would confirm. And when it confirms, feel free to add more. At that point, you're averaging up, okay? I finish off the lesson or the chapter with a quote. Quote, "It's okay to be wrong more than you are right, as long as you cut your losers and add to your winners." So you don't even have to win more than 50% of your trades. Like that's not what it's about. You could win 40% or 30% because you properly only 30%, right? Because you properly managed your risk and you cut those losers. But when you were right, you were really right? You let them ride, or you added to positive momentum. You added when your trade thesis was confirmed, that sort of thing. So that's lesson 15. Lesson 16 is switch time frames wisely. That will be fun. This is Trading Wisdom. 50 lessons every trader should know. This is the free version. It is available on YouTube. I'm on YouTube at Ched's Trading. Go to the playlist, Trading Wisdom, 50 lessons every trader should know. I'm going to do the entire book for free for you right here, one at a time. I hope you enjoy that. Feedback's been great so far. Not a ton of views, which is interesting. People love my market updates, but these videos don't get a ton of views, which is fine. But I am incredibly proud of what's there. You can find me on Twitter at Big Cheds, academic observations about price, trading psychology, risk management. The book itself is on Amazon. It's done unbelievably well. Thank you, and thank you so much for that. I really appreciate that. I'm also a cancer survivor. My first book was a memoir about my battle. It's called My Battles with Cancer. I'll send this to you for free. I'm not trying to sell it. I just want to get it out there so it can help people. So if this is something that is of use to you, go ahead, reach out to me and give me your email, and I'll send that to you. Just to remind you, I am a founding analyst at Bitcoin Live, the best-in-class educational platform for crypto. I've been doing this for 4 years. I do a twice a week, long-form, full market update. I haven't missed one in years. It's incredibly important to me. Doesn't matter what I'm doing in my life. I stop. I do these updates. It helps me practice, and it helps the team, something I take incredibly seriously. So this has been lesson 15. It's been fun. It's been my pleasure to do this for you. I hope wherever you are in the world, whenever you see this, whether it's today, a month, a week, a year from now, I hope you are doing well, and I wish you continued luck in the future. So we'll talk soon, all right? Big Cheds out.